recording right now.
Okay, so you're repeating that part.
Yes.
It needs to break.
Yes. Come, remove all this. The mistake you are making in this chart, you are letting the noise get a hold of you. We both know that to drive this market, we will first of all say that this is our last lower high and this is our last lower low. Anything that makes this lower low breaks forms another structure, giving us another lower low. And this being our lower high because this still remains. This being another lower high. So we have another lower low, we have another lower high. Are you guessing it? They will have another lower low here.
Broken, yeah.
Are you guessing it? So the change of character you said right now is not bad. But look at this. This was your last lower high structure. Are you guessing it? So that's your last supply. And that was the supply that broke this low. So we have a break of structure here. We have another break of structure here. Because those are two break of structures that happened. So whatever broke this structure is this guy. Then whatever broke this structure was this place. So this was the last lower high we have that must be broken first to the upside. So if this breaks and here becomes liquidity to the upside, we will find supply in our 4-hourly supply zone. So when we find supply, then this market will come down to this downside. But if this was a demand zone, if this was an internal switch to the upside because we had a lower low, then we switch to the upside here, doing a change of character here. This was not where we did a change of character. This was where we did a change of character on this downside. So let me zoom out so that you can see very well. So this was a change of character we had here because when the market was coming down, what did I tell you? No, none of this is supposed to break another lower high. But we had an internal break of structure here, change of character to the upside here.
That's what we want to buy.
That made us to have a Fibonacci retracement of 0.382. Remember the first one, 0.382. And since then, we turned bullish, making here a support. So you have to take account of everything that is happening in the market and write out your supply and demand zone. So this was the reason why we had what's it called?
Head and shoulder.
Yes, we now brought our Fibonacci trend extension in and put here. This was the reason why I would have bought from 0.38 to remember our first shop is 0.382. I would have either sold here or sold here, taking profits from here, from entering the trade from here. My stop loss is under here, even though we came back here to take everybody that was having break even already from this move, take them out, and switch to the upside. Now I've touched our 0.786 take profit level if you have taken it straight from here. Are you getting it? That's the first trade. So right now, something is to happen. And what is that thing? What is to happen is that we are to take liquidity on the upside. Is either if we take this liquidity at the upside, we have actually changed character to the upside. That means that we have to do a smaller shock back to this supply or the support area. This is the demand area. Back to this demand or support area, Then if we can find demand and find a way to switch back to the upside here, are you guessing it? We will then come back and break this supply. So this supply might enter here, they bring us back down here, they find a switch back to the upside again, Are you getting it? Because if I draw my Fibonacci, you see that we entered the 4-hourly supply. Are you getting it? And came back to the Q zone. Are you getting it? And before we go back up, if you don't do your market analysis like this and you get carried away by what you see in the noise, trust me, you enter wrong values. Not that you are wrong of your buying trade, but you enter wrong value. So whatever is going to happen here, at the end of the day, if I should take all this, whatever is going to happen here, some people will say this is liquidity, like we did at the top here. If you see the video I did, I said this was liquidity. But I did it on the future reference, for future purpose, because whether I like it or not, this market is bullish from here. So this market will only be bearish if we come to this lower time frame, come here and break it and retest it and go down. But if it comes back down here and finds support, we'll come and break this previous liquidity we had here, because this is liquidity to me. We'll break this, retest it, confirming our head and shoulders pattern. Because we have not actually done a proper right shoulder yet. So this is what we'll do our right shoulder for us, where we'll break from. Are you getting it? Retest it, then before we come to this daily supply. Are you there? Okay, you are off. So I'll do this video and send to you right now. So the mistake you made in all this is not saying that we've not done a proper head and shoulder. This was just the first piece of the shoulder. We definitely need to come back down to supply zone to do a left shoulder before we go back up. So if I should take all these things off, I'll bring my head and shoulders pattern in, where we'll definitely need to come and break. Break to the upside. 3 always breaks, 4 confirms the head and shoulders pattern, then 5 comes. This is what you need to know and see in this chart. Are you getting it? So always watch out for your proper head and shoulders pattern. Are you getting it? Because this head and shoulders pattern is not properly formed here, except this market breaks to this structure to the upside. Are you getting it? Retest our supply zone, then come and retest here, which we know that we'll enter back to the downside, then continue going. We're still saying the same thing. Very important. Okay, so let me end this here and send you that video. Then we'll continue another session.